Hey there, this is Victor Santana at StockHunters.com for Tuesday, October 18th. Here we are looking at the daily chart going back 3 months. This is the S&P, which is the ETF ticker symbol SPY that we closely follow. And as you can see, we had a positive day, a 1.95% here. We've broken above this trend line here from this candle high here, and so we still got this other one right up here to contend with, which is also at the same time the 100-day simple moving average. As you can see, it kissed it right up here and then pulled back just before the close here. So this is going to be a major resistance up here. If we could break above it, that'll be one thing, and if we can close above that, then this pretty much will confirm that we are now on the uptrend, at least until probably the Christmas rally. But anything could change, and nothing's for certain in this market, so all we can do is just keep our eyes on this market. So here we are, banging our heads up on this area here. Good thing about it is this candle body, the green one, seems to be overlapping the red one right here from the previous day. So this is a bullish signal. So we may have a chance to break above here and either close above it or at least break above and then trade maybe sideways. But we do have this trend line that's coming from way back over here. And this is going to be support if we can close above in this area. So looking good. Now, looking at the RSI, you could see here we have this high peak based on Friday's formation. And looking at today's candle, we closed practically right even with this. And however, the RSI is lower. So we might be forming a divergence here. So what I'm going to do is I'm going to put this as just kind of a warning here. Divergence. If we do get a divergence, we could certainly see ourselves going down. Now you can see these moving averages, the 50 and especially the 18 is now rapidly curving upward. So if we do fall down, we can expect a lot of support here. Now if things are really bad and we fall down and touch it, we can probably gap below and continue on down, at least around in this area. But there are so many ifs in this market, so we'll just play it day by day. So let's just keep in mind of this. And then the MACD also, you could see the curve is lower than from the high. It's pretty much the same story here. And our histogram, the little bar, is again pretty much flat. Yesterday was giving us a red bar, which is good, which would consider to trigger in, and if you did that, you would be in play, but with a loss right now. So we'll have to wait and see how this plays out. But this is how the S&P market is looking, at least from my point of view. Let's go ahead and look at the Dow. The Dow 30 here. You could see here this trend line coming up here, along with the 100-day moving average, where they're just intersecting here, and we also kissed it right up on this area. So very strong. These trend lines are very strong and very almost predictable, as you can see, is where the next stopping level is. So we are trading between these two here, even with this moving average here and this trend line coming down, and also intersecting here. So we got a lot of support down here. RSI is also telling us the same story. Let me go ahead and put this possible divergence coming in, and the MACD is also curving down. Now in this case here, the prices is lower than here. So actually, I'm going to go ahead and take this off because that would not be in play. So we'll keep an eye on this. Now let's go ahead and look at the Nasdaq, which has been doing the strongest. And here we see the price pattern is equal to Friday's, and also it's just right below this trend line right over here. And if we look at the RSI, we could also see in this case, because the price has reached the same height, RSI is now lower. So on here, I could pretty much say we may be seeing a divergence form here. MACD, slight divergence as well. And in this case here with the Nasdaq, we now have a second down day here, the red bars. Very small and tiny, but something to keep an eye on. So let's watch this. Let's go ahead into the Russell's 2000, the small caps. I'm going to go ahead and move this over into a clear area. There we go. And pretty much kind of traded sideways here. We haven't hit the upper trend line, so it's lagging, but it's still stuck between these two trends. And it is also bouncing on the bottom of the 50-day moving average here. Looking at the RSI, is significantly lower on this peak compared to this peak, which here it is slightly lower. So this is pretty much playing in sync to how it's moving, so we won't put a divergence on this. MACD is also lower, and we pretty much have, as far as our bars here, flat. We have no bar here. It's virtually flat. So we'll keep an eye on this. And then finally, the global markets. You could see here on the global, price has gone up 1.34%. And however, we haven't reached the upper trend line up all the way from September. And price has also reached pretty much the height of this, but at the same time we got this lower peak on the RSI. So on this one here, I am also going to go ahead and put this as a divergence. MACD is also pointing down, and our histogram bar is flat here. We don't have it. We had it yesterday, but today we don't have it. So its momentum has decreased to the downside slightly. Okay, now let's go ahead and look at some of our plays here. And we're looking at DZZ shorting gold 2 times. And as you can see, it has gone up but then pulled back, but it's still higher than yesterday by 0.8%, which is good. We are hitting resistance on this 18-day moving average. So if it breaks above it, and then it could run up to the 100. But right now it's still trading between these two here. Looking at the RSI, we are right in mid-level point 53. So pretty neutral. And if we look at the MACD, the histogram bar, it is now pointing toward the upside. So momentum appears to have built up to the upside. So, which is good. That means gold might have a tendency to go down further, which would cause this to go up. So we'll keep an eye on this. Next one here, inverse energy. This one here is we've got entered in here, continue to go down, and we're still on underneath on the oversold area on the RSI, and we have not got a signal to consider getting in, even though I got in a little too early here. But that is my fault. And let's go to Las Vegas Sand. This one's an actual short of a stock, and we are still trading between here. Our exit point would be right up in this area, and you could see we are trading just under the 70 line here. The peak's getting smaller and smaller, so we hope that the market will pull this down a little bit further. So just looking for either a break even or just a small gain. We don't expect much out of this. If it gaps down, the worst case scenario, we can go down to 40, uh, which will be best case scenario for us. So we'll just keep an eye on this. Let's go ahead and QID, shorting Nasdaq. We entered here, and we're still holding on to right over here. We do have this divergence here, so let me go ahead and put that there as well. Small divergence. That we have a low here and a higher, possibly low forming here, while the price action here is flat. As you can see with the little wick as well, so it's flat while this one's increasing. So this is good. The histogram bars is flat, so right now no definite signal. Going to the S&P, shorting SDS is going to be pretty much the reverse of the SPY. So we got that divergence here. Well, price has gone a little lower here. This has gone up, and the MACD and the histogram is flat. SPXU, which is the same as the SDS, but just leverage 3 times, will be the same story. So we're going to go ahead and add that as a divergence. And then finally, TZA, shorting the small caps. Where you can see price is still holding, it's flat, but at the same time the RSI is higher. So this would give me a little more confidence to continue to holding on to this a little bit more. If we do, we need to break above the 100, and maybe we could tag up to here where the 18 and the 50 area is here. We don't expect too much of a downside unless we get really major news, and we'll break past higher on this, but that might be more of a long shot. More realistically, we could probably go back here or just bounce and tag underneath here. So we'll take a look at that as the days go by. And that's pretty much it for now. So until next time, keep your eyes on the markets and take care.